This is John Shealy of the Traders Country Club, and this is part one of comparing the advantages and disadvantages of day trading stocks versus day trading commodities. Now, we're going to have a look at several advantages and disadvantages of each in this video series. Now, this part one is going to take a look at some of the advantages of day trading stocks versus commodities. First, the first reason is that most traders who are new to day trading are very familiar with stocks much more than they are so with commodities. They're comfortable with Apple and GE and maybe Bank of America and ExxonMobil and many stocks that they're familiar with watching many of their favorite financial television programs, and even looking at their portfolio as they look at their mutual funds and what they may be trading. So most individuals are familiar with stocks, and that's why there is a great attraction to day trading in stocks versus commodities. There's not that many people who feel comfortable about their knowledge of taking a look at trading corn or crude oil or even the currencies that may be available in commodities and futures accounts, as well as trading the stock index futures. Let's face it, most people are comfortable with stocks than they are commodities. However, after looking at this video series, I'm hoping that most of you looking and watching the advantages and disadvantages of each becomes much more comfortable with the notion of day trading commodities, because there are some advantages in day trading commodities. However, let's take another look at some of the advantages of trading stocks. One is that there is a greater flexibility to reduce dollar risk in stocks versus commodities. Now, this is going to require us to take a look at a chart so you better understand this particular problem about trading stocks versus commodities. Here I've put the 2-minute chart of Qualcomm, and I recognize that there are day traders in stocks that trade off of tick charts or 1-minute charts or 5-minute charts or charts of a different time series, but I'm just giving an example in a 2-minute chart. Now let's examine the advantages of stock day trading, and one is the ability to control dollar risk. Now, there are some traders that trade off support resistance, and I've put this line to illustrate the wall of support that was present at 45.60. And a trader may have noticed that prices started to break down and then re-challenge that 45.60 level. And as prices began to fall back, a trader may have decided, well, if prices move to 45.55, I'm going to go short. But we all know that if you're going to put a short position as a day trade, you need to think of a stop loss. A trader looking at this chart says, well, I saw this zone of resistance, so if prices move to 45.62, I will buy my stock back at a loss to protect my account. So in other words, we may put on a trade and risk 7 cents. Now, here's where the advantage of stocks comes into play. If I was going to sell short 100 shares and risk 7 cents, that would be a risk of $7 for my account, not counting commissions. I could trade 1,000 shares and still risk $70. Now that is very different than commodities, and I'll show that briefly. But the point is that stock day traders can vary their risk much more easily than a commodity trader. They can select their number of shares traded, and in this particular example show a risk from anywhere from $7 to $70 to $700 on 10,000 shares. A trader can vary their dollar risk much more so than in commodities. Let's take a look at a commodity chart as an example. Now we're looking at the January crude oil in a commodity account. And let's say the trader bases kind of a similar strategy. He sees support and prices break down, and he decides to go short at 76.98, just below the support zone. Well, he's going to use his stop loss too, and he looks at these resistance levels and says, okay, if the market goes to 77.12, I will place my buy stop. So in other words, I will go ahead and risk 14 cents. Well, on one contract of crude oil, That's a risk of $140. That is the smallest amount of risk that a trader can take, because in futures you cannot have less than one contract. So that is the problem about commodities. Sometimes the dollar risk, even on a single contract, can be excessive for small accounts. That is one of the big advantages of stocks versus commodities. There are times commodity trades have a very high dollar risk even for a single contract. Stock day trading allows greater abilities to reduce the dollar risk to the level that the stock day trader is more comfortable. This is the end of part one of comparing the advantages and disadvantages of day trading stocks versus commodities, and I welcome everyone to the Traders Country Club to learn more and more about day trading the stock or commodity markets, as we have many free lessons available to anyone who's able to have access to the web. This is John Shealy of the Traders Country Club.